Hello, everyone. Logan Hertz here with Hazeltine LLC. We have back a returning guest, looking sharp as ever, Mr. D'Andre Clayton. How you doing, D'Andre?
What's going on, my man? Oh, I need to move where I have you so I'm not looking all down and stuff. Let me look up where the camera is. I'm like, oh, what's going on here? All right, we're good now. I can see you. We're fine.
D'Andre knows how to look sharp. He knows how to look sharp. When you drive the kind of cars and wear the kind of jewelry he does, you
Oh,
have to be
stop
wearing a
it.
suit.
Stop it. Stop it. Stop it. I don't have any jewelry
We
except
don't
for
we don't
tie
want anyone to
pins.
get too discouraged, so we've edited out the palm trees in the background and
Nope.
the collection of sports cars that he has.
Not at all. Not at all. Not at all. Not at all. Those are depreciating assets, man. I can't do that.
Yeah.
That's.
Well, not if you invest in them right with collectibles, but then you can't drive them. That's the problem, you know?
Yeah, yeah, I'm not. I'm definitely not sinking no money into no car can't drive. I ain't got that kind of patience.
Well, that's a whole nother topic of conversation, but actually a lot of those luxury goods are good investments if you do it right, like fine wine,
Yeah,
rare cars, fine art.
art, art. Yeah, yeah, yeah,
The
for
problem is
sure.
if you're gonna buy a car as an investment like that, you buy a nice Lamborghini, but you could never drive it because then that would hurt the investment value, right?
Yeah, not interested. Not.
Well, so I wanted to talk a little bit about HELOCs, first lien HELOCs, second lien HELOCs, velocity banking, and Mr. Clayton has a lot more experience with these vehicles and these strategies than I do. And I wanted him to talk about the ways some of his clients have successfully used them, what they've done, whether it be debt payoff or investments. So, Mr. Clayton, the floor is yours.
It's interesting because when we first started this, I wasn't necessarily on the IRMA side. I had already been doing Medicare. So with my switch to being heavily involved in IRMA, I've had some more experiences, but slightly different on how first lien HELOCs could play a role, not just at helping people to pay down their homes very quickly and open up equity and then transition into a reverse mortgage. That's been a play over the last 2 years. It's been a play to help a lot of folks. That's a common story, though. So, clients are close to retirement, want to make sure that they have healthy equity, and then can transition over into a reverse mortgage for income. And we use that income to offset the modified adjustable gross income so that they can start using your Roth conversions, etc. So that's my common thing now. I used to be a lot more adventurous, so I do have some cool stories that are not as analytical when I was dabbling in the real estate industry and helping people who are interested in real estate. And some saw me on different podcasts and got really excited and they wanted to do different things. But we always started off on the premise that when I look at investing money, I just call it future debt. And so once we call it future debt, the way that I would do an analysis would be if we seeded this money for a fix and flip, if we seeded this money for anything else, how quickly could we pay off that money even if there was no income that came from it? Now, of course, we're more than likely going to get income, but it's just like an expectation set for worst case scenario because I'm so conservative. So so that's one thing that has been pretty consistent. What do you want to invest in? Real estate, your business, varying different things. So I'll leave you with a few stories today. So one of them was a young lady who approached me. She was a truck driver, about 40 years old. She's like, yeah, I drive trucks. And I'm like, oh, okay, cool. I'm asking her what made her think about doing it. And she was an owner operator at the time. And so she said, I like driving trucks, but eventually I want to get out of the truck. That's my ultimate goal. And so we sat down and came up with a plan. I asked her, have you been pricing trucks? Have you been looking at, now that you've driven trucks, you understand the maintenance schedule and all those different things. So let's say you took some money from the HELOC and you went ahead and paid for your next truck. How long would it take us to pay off that? And what type of routes do you think you could procure to boost the income? We did this for the first one. Now, she didn't call me after she bought the first truck. So I knew she had another truck. So now it's two trucks in this time frame. And it's about 5 months after I started working with her. And then a year and a half later, I called her and I said, "What's the update? What you been doing? How's everything going?" And she's like, "Well, I'm out of the truck now." And I'm like, "Oh, okay. Well, how'd that happen?" And by then, she had bought 3 additional trucks. So she had paid off the trucks, kept using the first lien HELOC, just seeding the money through, rinse and repeat, and just had the income that now all 5 people who were driving the trucks, she was able to just say, okay, well, the amount I'm taking off on their routes is the same as what I was making when I was driving it by myself. She was so excited. We worked more on her estate and all that kind of stuff at that point because she was like, "Oh, I know I want to do this and I want to do that." And so we wrapped up those things. But she said, maybe at most I'll do 2 more and then I'm done. I'm not gonna. She said because it's still like it's a lot being the dispatcher. So now she's not in the trucks driving, but she is dispatching. And so I told her, well, you could offload that job as well and create a position as a dispatcher. It just depends on how much income that you want for yourself still. Do you want it to stay the same? Because obviously, if you pay somebody for this role as dispatcher, it's going to come from somewhere. So she decided, okay, well, I think I'm going to stop at 7 and then I should be able to just be completely hands off. No me dispatching, no me driving and making that same income. As of right now, she's still dispatching, but she is making the same income that she was making before she was only driving the truck by herself. Her HELOC is really healthy. Before she buys a truck, she typically is around $20,000 or $30,000 left in it. She always keeps it low until she purchases her next truck. That's the plan we put her on. And it's funny because when you're doing planning with the HELOC, it's a little simpler than you think because it really is just repetitious action. It's not any rocket science. It's just,
And the
hey, that worked.
execution, yeah, the execution is made a lot simpler because it's automated. So you can do a lot of
Exactly.
these strategies with a second position HELOC too. For a lot of people, that is the better solution. But one drawback is there's no automation. You've got to manually run things through
Right.
that HELOC.
Right, exactly. So that was the really cool thing about that. So that was one of my experiences. Another experience I'll say is probably kind of common is the person who just pays off a lot of debt. Getting a person who had $60,000 in consumer debt, but they still had a decent credit score because of their income. And we just set up a payment plan in reference to certain things like how we were going to cycle it off. Because I didn't necessarily blanket the debt right away, just because there were some debts where the cash flow effect or impact was not as large as I would have liked it to be for me to just blanket it with the HELOC right away.
Mhm.
So a lot of times what I did was a mixture of debt snowballing and then as we've snowballed a lot of it, now maybe we can take on the larger portions of debt that even though I may not like that it's only $200 it's affecting your cash flow, even though I may not like the smaller amount that it affects your cash flow, it makes sense after we've gotten rid of all the other things that really affected the cash flow. That's a normal example. You have those kind of examples where you're scaling the client. So whether it be a client who finally was able to pay off 20,000 or a client who was finally able to pay off 30 or 60, that's a normal thing. That's not crazy in velocity banking. The things that you look at as like your apex is paying off houses,
Yeah.
investing in something large.
Mhm.
Mine is about freedom more so because I'm
Right.
always pitching the freedom that you have and whatever you want to do with that freedom, that's on you.
Right. I think
Right. And that's
they fall into two camps. There's debt payoff, whether that be paying off toxic consumer debt, whether that be
Mhm.
someone who maybe runs a business that uses debt and making that a lot
Yep.
more efficient. And then there's using it to purchase investments, whether it's buying trucks or
Yep.
buying real estate or businesses,
Yep.
something that cash flows. You cycle your cash flow through the HELOC until you pay it down to a certain amount. Then you borrow it
Yep.
back out, purchase some asset, and then use that cash flow to pay down the HELOC. and keep rinsing and repeating. You can do the same thing with whole life insurance. And I think everyone should be doing both. I think you should have, a strategic pool of liquidity in the equity in your house, whether that's a first or a second position HELOC, and you should have a strategic pool of liquidity in whole life insurance. And
Absolutely.
I'm
Absolutely.
I'm gonna derail the conversation like I always do, because I always got to bring it back to me and experiences I've been and bring
No,
in
that hey,
the negatives. Because I'm sure you get this too, where there's a reason why I now charge money for a consultation. But right now, you can still have an introductory call for free,
right.
30
But
minutes intro, no problem. If you want to do a consultation, there is a fee, and I'm not making money
mhm,
off of the fee. It doesn't compensate me for the amount of time I spend on it. It's more just a filtering mechanism.
yep.
Because I'll get people who will call and they think that velocity banking or infinite banking is a get out of jail free card. So they'll
No.
call me and they'll say, look, I got all these debts. We've been living paycheck to paycheck, but I'm ready to get with the program. I want to get rid of these debts. And then in the same sentence, they'll say, but it was our 10-year wedding anniversary. So we went on a first class trip to Mexico and we just traded in our paid off car and got a new car payment because, of course, we had to. There's always an excuse, there's always a reason. We needed it for our business. It was our kid's graduation. It was my 50th birthday. There's always a reason, there's always an excuse. And I'm just politely ending the conversation because I'm like, you are
Yeah.
signaling to me that you are not serious about this. You have not reached that pain threshold. You're saying, I'm willing to fix this if it just means getting a HELOC, but I'm not going to
Right.
seriously change any of my habits, in which case I cannot help you. You're not
Yeah.
serious about this.
Yeah. Yeah. And you're spot on. In fact, I just got off a call a week ago with a client, and they regret to have not called me earlier. So,
Common refrain, common refrain.
this happened to me twice in the past 2 months. So one of them, it was, hey, we did a fix and flip. We got the income back. We put it into the HELOC, and then we did another fix and flip, but we didn't come out on the positive on that fix and flip. I said, oh, okay. So you lost money on that flip. He said, yeah. And I said, and so what happened after that? He was like, well, my wife, she was like, man, that was supposed to work. You know what? Nah, man, I ain't doing this thing no more. And she decided to stop sending her income to the HELOC. Now, of course, I ran the demonstration originally on both of them sharing their money into the HELOC. And this is a lesson that most families need to learn, right? Especially in regards to a first position HELOC in particular. A first position HELOC does not work without dedication. It's one of the greatest tools, but you got to work it. You can't just, well, thanks for giving me access to all this money and then use it for something expensive and then turn around and decide I want to take my ball back and I'm only going to pay the interest payment. That's not going to work. I've seen that happen before, and I always have to course correct the people because it's like, okay, what is the reason why you stopped putting your money into the first position HELOC? Oh, she wanted her own money. And what's her own money going to do? It's going to sit in the checking account. And what is it going to do in the checking account? It's not going to grow. Is it going to help you pay off debt? No. Well, she felt like the HELOC was locking up money. I was like, that's not true. There's no way. Newsflash. If you can take 200,000 out at one time, there's no way you can convince me that you feel like it's locking up money. It doesn't make any sense. But there's a sentimental attachment to not being responsible. And the first lien HELOC is for responsible people.
Correct.
We're not going to sidestep that reality. If you're not
Correct.
responsible, go get a mortgage. But if you're already in the HELOC, don't go get a mortgage right now. Get control of your finances because the rates are ridiculous right now on a mortgage. So you're going to be dying in a mortgage even worse than
Well,
the
and
HELOC because they're close now.
it's surprising to me how people will do the first thing HELOC on their own, and they don't seem to understand even the basics of the strategy. I met with another prospect where they had on their own gotten an all-in-one loan, and they were super excited about it.
Right.
and they have a business and they have this other stuff and they're not running any of their business income through the all-in-one loan. I'm like, what are you doing? And it was like this light bulb moment for them. They're like, wait a minute, we're supposed to be running all of our income through the first lien HELOC? I'm like, yes, all of it. That's the whole point. Otherwise, you're missing out on this. Part of the problem, I think, too, was they had a CPA. Shockingly, I know this will be a shock to you, D'Andre. The CPA didn't know anything about a first lien HELOC. Shocking. And the CPA isn't trying to help you come up with the most
What?
efficient strategy. They want to make it so that they don't have to do anything. So they don't have to get up off
Right.
their lazy rear ends and do anything. So they want everything
Right.
in a separate account just because they're lazy,
Right.
not because it needs to be
Yeah.
there.
Right.
Don't let your CPA tell you that, okay? It's just because they're lazy. All right. You can
Yeah,
run your
because you can
business
just
income.
bookkeeping.
Yeah,
Yeah.
you can run your business income through your first lien HELOC and still
Mhm.
keep it and still earmark it separately from your personal. It's very
Yeah.
doable. So that kind of a thing where I'm just having to explain to people very basic things when they get into this and try to do it on their own. And they don't
Yep.
understand even the most basic things about the strategy or the tool. I don't know how you get into
Yeah.
it without understanding that you need to be running all of your income through it. This is now your primary
Yep.
cash flow management tool. So, guys, meet with an ambassador. It's not
Yes.
hard,
Yes.
it doesn't take a lot, but you will get way more out of it. And even if you
Yep.
already know everything and you talk to the ambassador and he doesn't add any value, it was still worth having somebody check it, having someone who's qualified,
Yeah.
not the mortgage loan officer, but an actual ambassador who doesn't work for the bank.
Yep.
And but
And it
almost but every time someone meets with me, no matter how great their knowledge is, I can always find some additional optimization that they hadn't thought of.
absolutely. And there are times when my clients, it's so funny, they'll dig themselves into a hole and they won't call you while they're digging. The hole will already be dug. And then they're like, hey man, I got a question. And it's like, okay, so what's been going on? And it's like, well, I meant to call you some months ago. The balance hasn't really been moving on the first lien HELOC. And then I'm asking questions as to, well, what's been going on in your life? Why isn't it moving? Are you having issues with work? Are you having issues with this? Having issues with this? One person told me, well, to be honest with you, my son, he had some health issues that were really serious. He needed a transplant type of serious, like that level. And it was a very young kid. So I said to them, well, I wish you would have contacted me earlier because you've been paying the medical bills. He was like, yeah, and it's been sinking me. And I was like, you probably could have put your son on Medicaid. And they were like, no, 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 we make too much money. I said, well, you may not know this, but Medicaid also has a provision where they will base it off of the person who actually is the sick person and their income. And they'll only do that if the condition is dire enough that they know that the person who has the money still would be sunken by it financially. So if you're diagnosed with something serious or anything like that, or you need a kidney transplant, you need a heart transplant, if your kid needs that, 9 times out of 10, it is an automatic qualifier for
Yep.
Medicaid. But
Guys,
most people
guys,
don't know.
DeAndre and I are not order takers. We are not here to give you a HELOC. That's
Right.
not what we do. If you want a HELOC, you can get it on your own. We are here
Yeah.
to help advise you on the strategy, and we are looking at it holistically. What
Yeah.
DeAndre is helping these people in a way that they had never thought of. It has nothing to do with HELOC whatsoever. But I and my team of partners, and DeAndre is the same way, we will look at your scenario and you're getting access not just to me, but the dozens of people that I work with who can
Right.
help. And I tell people in the consultation, give me everything, all your financial documents. You might as well get the
Sure.
best value out of it. Me or someone on my team is competent to review them. And
Yep.
worst case, you get some advice, some insights, and you decide not to go forward with it. You still came out ahead. This happens all the time where
All the
I
time.
I help my clients find major improvements in ways that has nothing to do with whole life insurance, nothing to do with HELOC, infinite banking, or velocity banking, right? So don't come to
Yeah.
me and view me like I'm an order taker, like, hey, I want a life insurance policy. Back up,
Yeah.
hold on. What's going on?
Yeah.
Why do you think you want that? Let's start with your values and
That.
beliefs. and your overall financial picture, and I'm going to help solve your problems. If you
Yep.
want life
Yep.
insurance, just go online and get it. You don't need me. Costco sells life insurance, I'm pretty sure. If you already
I
think,
like
because what you're telling me is you don't really place a value on my expertise. And if that's the case, then why don't you go somewhere else? I don't
Yep.
understand why you're taking the time to book time with me if you're just viewing me like I'm a robot who's going to give you a HELOC or a life insurance policy or whatever the product is. So again, I
Right.
just want to keep hammering on this point because this comes up time and time and time again when D'Andre and I are telling
Yep.
our stories. We help clients in a way that you probably weren't expecting. If you're viewing D'Andre Clayton as a first thing HELOC guy, if you instead just had an open conversation with him, he could have helped you save probably tens of thousands of dollars on medical bills, right?
Yep. He felt relieved and bad at the same time. You know what I'm saying? Because he was like, I should have called you. And I was like, yeah, I mean, I am busy, so I don't know when you are going through what you're going through. And so this is just standard order of practice or procedure for most people. Like Logan was saying, make it a practice that if you feel like you're sinking, you feel like your back is against the wall at any time, reach out to an advisor who you deem cared about you. He knew I cared about him, but he just was kind of, I guess, embarrassed, or I don't know
Yeah.
what it was.
Yeah, and
But
I'm not trying to
he,
beat people up either. I understand. We all do this. I do it too. Like
yeah,
when you're struggling, you don't want to reach out to somebody. I understand. I understand. It's natural human
yep,
psychology. So,
yep,
you know, but
yep,
come and talk to us and let's have a broader conversation. The broader the conversation, the better I can help you because products by themselves are meaningless. What are your
yep,
financial problems? Let's solve those. What are your financial goals? Let's realize those. That's what we're trying to do. And we have all kinds
absolutely.
of unconventional tools that we don't necessarily talk about because they're not our specialty. They don't apply except in some very specific situations. Medicaid would be one of them
Well,
in this
it's
case.
kind of my,
In this
I
case.
said, actually, it's kind of my specialty.
Well, that's the other thing too. I'm not relying
That's
on
where
just
I came
myself.
from.
I call up Peter Nelson. I've called
Yeah,
D'Andre more than once to get
yeah,
advice on, hey,
yeah.
what would you do with this case? And D'Andre said, "You and I are competitors, man. Quit calling me. I'm
No,
gonna undercut you."
I would never do that.
No, it's the same thing, right? I'll reach out to my partners and
Right.
we will get an expert opinion and analysis on an insight and help you make better use of what you already have as an example.
Yeah, absolutely, absolutely. When I say Medicaid is my expertise, let me make sure this is clean. My background is Medicare. So Medicare and Medicaid are very closely linked. Even if you think about CMS, the Center for Medicare and Medicaid Services, that's actually what it stands for. So sometimes I get into situations that are a lot more personal on the health side.
Yeah.
I've been a guardian. I've actually went to court for a client to gain guardianship over another client that I had ended up getting and help them to get the check and all that kind of stuff. So I'm very well versed in that system. So just ask me a question, right?
Yeah.
And I said, don't be afraid to ask a question because if I don't know, I will seek. I've always been
Right.
that way,
Right.
right?
And the
Yeah.
other thing we're gauging too, the other thing I'm trying to gauge as I'm talking to clients is how much work are you willing to do? What kind of work are you willing to do?
Right.
And that's going to influence the outcome and the solution because there are always lots of solutions, but sometimes the client just is not willing to jump through the hoops necessary to do
That's
it.
true too.
So at that point, I can still help, but I'm more limited. The more work you are willing to do, the more progress we can make. And that's just something we have to judge and feel out. And what's interesting too is some people might consider one thing to be a ton of work, but another thing they consider to be very easy, even though the amount of effort required is about the same. It's more of how it suits your psychology.
Yep.
So that's part of it too. We'll do as much of it as we can. We'll make it as easy as we possibly can. But invariably, there is some work that the client needs to do. How much are they willing to do? That's going to influence the outcome.
Yep. Absolutely. Now, I got another example that's a success. If you were to like do a highlight reel,
Uh-huh.
this would probably be the one that I'm like, hey, he replicated it the best that you possibly could. I'm not expecting that everybody does this. He was a real estate developer and he saw me on the podcast, called me. And when he booked the appointment, he said, "Hey, man, I'm doing some really big deals in West Virginia and I'm killing it. And I get seeded money all the time from an organization to develop these properties, apartment complexes, all this other stuff." And so I was like, "Okay, well, why are you calling?" And so he's like, "Well, I'm doing really good, but I just feel like I could blow it out the park." And I said, "Okay, well, how long you been operating?" He said, "Oh, I've been operating for 6 years now." I said, "How much do you make a year?" He said, "About 1 million." I said, "Okay, hey, right. That ain't never bad." Right. So I said, "Well, how much property do you own?" He said, "I own 2 million free and clear. And that does not include my personal home." So he owns 2 million free and clear and all of the other residentials that he's renting out and all that kind of stuff, his investment properties that he's renting out. And so I said, "Okay, well, I go through my HELOC analysis and everything." He was like, "I already saw you. I think it's brilliant. I want it. I want it. I want it." He was like, "But I don't want to do it on my house." And so I'm like, "Why don't
Here
you
we
want to do
go.
it on your
Here we go.
Why don't you know your house, right?" So he
That, by the
says,
way,
"Well,
to cut in, that's a fairly common one. Guys,
yeah,
almost always the right place to do it is
absolutely.
on your primary home.
Your
People
primary is usually going to be the best."
people who say, "No, no, I don't wanna do it on my primary home." I'm just like, "Okay, why?" Because
Why? Please.
you have to, once you understand how this works, you understand it's actually much better and lower risk to do it on your primary
Yes.
home. It's much worse and higher risk to do it on an investment property. The big time
Yes.
real estate investors I know who do it right, their first lien HELOC is on their primary residence, not on an
It's
investment
on,
property.
yep. It's on their
Yeah.
primary. So
Yeah, go ahead.
so we didn't get it on their primary until 2 years later, but this is because of our conversation 2 years later. He finally put it on his primary. In our consultation, I was like, "Okay, well, he doesn't want to do it on his primary, and then one property isn't really enough for the type of money that he's trying to flow through. The properties in West Virginia, they don't really have high values. It's a relatively cheap place to live. We're looking at one property and it's like, oh, okay, that's 200,000. It's going to open up one, whatever." He's not excited about that. He's like, "I think I can really scale my business if I have 1 million plus." I'm like, "Okay, this would be a lot easier to use a house, but okay, all right, never mind." I'm like, "All right, whatever." So I said, "All right, well, the best that I could suggest is maybe a bridge loan or portfolio loan, but being a line of credit. If they would give you a line of credit against your portfolio, maybe it would work. I doubt that the interest rate is going to be better than the HELOC, which it wasn't at the time, the interest rate at the HELOC, because this was quite some time ago. So the interest rate on the HELOC at that time was 6%. And the portfolio loan was 9. And so he was like, "It's okay. I just want as much access as possible because if I get that access, I'll be able to speed up my business and I don't have to wait for them to seed money. When they seed me money, great, but I've already done a whole bunch of individual stuff, got it working and making tons of money." So I said, "Okay." When I gave him the advice, he went to the bank the next week, asked me, "Hey, look over my financials." So he sent me his financials and he asked me what he should ask for. I told him, "Well, see if you can get at least 1.1, somewhere around there." He asked for 1.5. They were like, "Nah, we ain't give you 1.5." So they gave him 1.1. And in this loan, he started just flooding deals. He started funding himself and doing so much, running his payroll through it. He was just going crazy. And when I talked to him 2 years later, he said, "DeAndre, if only people actually listened to you and followed it and did not deviate, then kill it." And I said, "Well, you sort of kind of deviated because you didn't use your phone."
Yeah.
I said, "Brett, from the strategy standpoint, you did well." And so he said, "Today, I have 7 million in property free and clear." This was 2 years after meeting him, and he had 2 million originally. So I'm like, "Whoa, how'd you do that in 2 years?" And he said, "Well, you'd be surprised how much money you save when your wife is stationed in another country." He made a little joke about how his wife, she's in the military, and she was stationed in another country. And he was like, I ain't had to take her on dates or nothing. So I was just working night and day, night and days, and that's all I was doing. And so I said, well, why are you back here then? You've gotten 7 million on free and clear. How's things going as far as the loan is concerned? And he said, that's why I'm back. I need to put it on my house now. I said, well, why do you need to put it on your house? He said, because they changed the terms on me and they didn't give me the same amount of money. And I said, what? He said, yeah. I showed him all the financials I had, and the bank locked up on me and was like, nah, we're gonna close this portfolio loan. And he was like, but I paid all the bills. So he was really upset because he's like, I was a good debtor. I paid everything on time. When they decided to close, he had 20 grand left on it and then went ahead and paid it off. But he was really perturbed by the fact that they could change the terms so quickly and that he was locked out of all of that money. So he was like, man, I was running everything through it and then it just came to a halting stop. And so he was like, so if it was on my home, are you telling me that they couldn't have changed the terms? I said, you would have at least had the terms for 10 years. He said, oh, all right, D'Andre, let me go ahead and get a say. But it's,
Yeah, and
it was a really, really,
they'll yeah,
yeah.
the interest rate, if you do it on your primary house, the interest rate is lower. They'll go higher loan to value. They'll go higher on the
Yep,
total value of the line of credit. You can
yep,
get it almost to 2 million, and there's less risk to you because you're actually on the property, you control it, you own
right,
it. They're not tenants running around on it. There's not liability issues as much. The real estate investors who do this, or they might not even be real estate investors investing in trucks as an example, whatever they're investing in.
right.
It's much better, generally speaking, to run it through your primary house. And when someone comes to me and says, I want a first lien HELOC, but I'd want it on my investment property, I have to stop, back them up, right? And if they
Back up.
and I'm not like you, D'Andre. If they can't get off that hill, I just won't work with them. I'm like, look, if you don't value my
Oh,
opinion, if you're not willing to have this conversation, I'm not serving you appropriately.
right,
So, because there are
right.
people who just say, nope, I don't want it on my first
Yeah,
house. I'm going to want it on my primary home. Not even having a discussion. Okay, well then go
right.
work with somebody else because you don't value my opinion. Mate, now I will grant there are times when it makes sense to put it on investment property or
Mm-hmm.
something that is not your primary home. So I'm not saying no. I'm just saying we need to back up and have another conversation because probably you're thinking it's going to be lower risk to put it on an investment property or because you have an emotional attachment to your primary home, which I understand,
Mm-hmm.
but it's actually much less risk and better to put it on your primary home. Greg Faricelli, I had him on my show. He does exactly what you're talking about. He flows his cash flow through his first lien HELOC on his primary residence and uses it to buy properties. And where it
Yep.
really helps these real estate investors is they can get access to they can buy deals that they couldn't buy before because they couldn't get financing, or there'd be a financing contingency, or they'd have to wait for the bank to do its thing, and they lose all these great deals. When you have capital readily available to you in your first lien HELOC, now you can grab those deals. And in many cases, you're a cash buyer. You're coming in with
Yep.
cash, right?
Yep. It's funny you mentioned that because you reminded me of another client who his deal was pretty interesting because he was trying to get a small business loan for 120,000. And the reason why he was trying to get it was because he had this bid that he wanted to put down on this deal and trying to procure some business from the government. And so this deal they had was like, hey, if you put up this much, then the course of doing the work, the project should net you about 600. So he's like, D'Andre, I've been trying to get this 120 everywhere. And I looked at my house and I saw D'Andre on the screen and I needed to figure out what to do. He's like, I was in a tight spot where I really couldn't get it because of how much my business was leveraged at the time. And that's not something normally that I hear. Normally I hear about people being more over leveraged, like as a person, where they're like, I don't know how much more credit I can get. And so he was like, I need to figure out what to do. And of course, from a business standpoint, I have heard over leverage from real estate investors because they just buy so much at 0% and all that kind of stuff. But in his particular situation, about 6 to 8 months later, he was done with the project. HELOC was paid off and he had netted so much. So I said, you need to bid on another project. You need to continue this. Whatever you want to put money into, you need to put money into it right now. Because to me, the point that the HELOC becomes the most inefficient is after you've paid off the property. So after you've paid off the loan, now it just stacks in a checking account. It's back to being just a regular checking account once you've actually paid off all
Right,
the debt.
right. Well, let me disagree a little bit, except for the fact that you now have a huge opportunity fund sitting in the
Oh
equity of your
yeah,
house.
yeah,
So it's not dead equity if you have access to it and if you're doing like Warren Buffett and just
right.
sitting on the sidelines waiting. That's
Yeah.
opportunity and waiting. So resist the urge to just go and buy something. Wait until the right deal comes around. But I know what you're saying because for good real estate
I'm just trying to get
investors,
working.
there's no shortage of deals for real estate investors. The shortage is finding the
Right.
capital and the financing to acquire those deals. That's really where the shortage
Yeah.
is. So they'll pay it down to where they're comfortable. Maybe it's less than 100,000 left over, and then they'll cycle it back out to buy the next property. And you can
Hmm.
retire that way once you've accumulated enough properties that the income
Yep.
covers your expenses. You at that point become financially free.
Yep. It's a wonderful tool because people always will have access to the money,
Right.
and
Liquidity,
so that
access, and control. Although you don't have total control, there is a bank involved, so it's not like whole life insurance in that regard. But the liquidity,
I mean,
especially early on, is superior. So
it's
yeah,
superior. Yeah, the
and
liquidity early on is
again,
superior.
it's both. It's not an either or scenario. You should have capital in whole life insurance. You should have capital in your HELOCs. Both have advantages and disadvantages, but both are great and very complementary. They complement each other very
Mhm.
well. And for each deal that comes up, or each opportunity, or each debt that needs to be paid, you can decide which makes more sense. Do I finance it with the HELOC or do I finance it with the whole life insurance policy? And then you can refinance it back and forth. I can take out a policy loan and pay down the HELOC. I can pull from the HELOC and pay down a policy loan.
Whatever I need to do to manage it. Yep.
Very
I,
flexible,
I
very
sure
flexible.
can.
Well, DeAndre,
Yeah.
we're running out of time here, but we thank you so much for your time speaking about some of your success stories with regards to first lien
No
HELOCs.
problem. No problem. Hey, my pleasure, man. It's been a cool journey. I haven't found another strategy that has an immediate impact. Like,
Like that, right?
I think, so with infinite banking, I love it. And I started with debt payoff. That's how I started with infinite banking. But the impact was gradual.
Right,
With the first lien HELOC, being able to see a person like not have any more credit card payments in like 2 months is unusual.
right,
and
right.
and to know that they can handle it and feel stronger. There was another example I have, and it's a failure slash win. I forgot to mention. Do we have enough time for this last one?
Yeah, get it done fast. Go fast.
All right, so this one is a client who actually is a personal friend. He saw me on the podcast. I don't actually poach my friends and family. I don't approach them about anything I do financially or in my business. But anyways, so after he watched, he booked a call or whatever, and we got him the first lane he locked. He was an IT worker at the time, and he was making about 160 a year. And 3 months later, he got fired. I'm on these podcasts and I'm talking about the first lane HELOC and I'm talking about the psychology. I can't lie to you, the human part of me did hit when I found out he got fired because one of our friends told me, and one of our friends was like, hey, he said you saved his life and all this other stuff. And I'm like, how did I save his life? And then he told me that he lost his job. And then forget I saved his life. I'm like, man, he lost his job. I need to get on LinkedIn and I need to post that I know somebody who's looking for a role. And that was kind of my initial reaction. So I call him and I say, hey, and this is 3 months after he lost his job. So he hadn't told me. So I called him and I'm like, hey, I heard some things are shaky. How are you? And he's like, man, I'm doing great. And I'm like, how are you doing great? Didn't you lose your job? And 160,000, losing that is not an easy thing for most people to take. That's a significant amount of money. You lost a $40,000 job, that's different. But 160 is much different. So he was like, well, I chilled with my family for about 2, 3 weeks. And then after that, I bought a 0 turn radius lawnmower, and I went to the local apartment complexes and I had 8 of them except me as a landscaper for them. And so I just started cutting yards. And he was like, bro, I'm actually kind of one with nature. It's not as much pressure as the corporate. So I'm trying to figure out what I really want to do. And he said, winter's coming. So I'll probably just put in applications in winter. And for me, that was the moment when, even though I had already been doing podcasts, I had already been talking about the first lien HELOC and this strategy. That was the moment when I really, really loved it, right? Because I was never going to be in his circumstances. I hate to tell everybody this, but the possibility of me not making money, because I don't have a job, but I have passive income due to my Medicare checks. So that thought of what if I lose all my money, it never crosses my personal head. It's not a feeling that I deal with, and it's not one that I innately can. I don't want to say I can't sympathize with it. I can understand it, but it's not my reality. So for my friend, I'm worried because it's like, oh, dang, that really does happen. You know what I'm saying? He really can't get fired or let go or whatever the case may be. I've been an entrepreneur for 11 years. And so, but this helped me to firm up my communication style around the psychological side of owning a first lien HELOC. Because before it was numbers and how quickly you can pay it off, and I can understand that, and it was easy. But after that, it was like, how do you feel when your back isn't against the wall? When you have so much access to capital, and yeah, you don't have your job, but you still have the ability to flow and move and do different things. And that gave me a greater appreciation for it that I really can't put into words in comparison to having a mortgage. I favor the first lien a little bit more than the second, because the second could just feel like a payment after things go bad. It could just feel like you got 2 mortgages when you got a second position HELOC. But when you got a first lien and things go bad, it's like you really don't get that feeling. You feel insulated from everything. You don't think that there's 2 big payments that are just killing me. That's just my last part. I hope that was quick
Yeah,
enough.
yeah. Okay, cool, man. No, I appreciate that. I agree. Thanks so much for your time, DeAndre. We really appreciate it. We'll look forward to the next one.
Likewise, my friend.